Alright, so welcome to the India market review for the week ending Friday 16th December 2016. As we know, this week has been a pretty bearish week for the Indian markets, and what we're going to do in this session is do a quick review of the global indices, equity indices, and also of the major sectors in India, and also quickly comment on how things have panned out in comparison to what we had discussed last week. All right, so starting with the global markets, what you should be able to see on the screen now is the daily chart of the Dow Jones Industrial Average, US index. And that has gone to 20,000, as we have kept saying for the last several weeks. A very bullish breakout. The nature of the breakout, the volumes have been pretty strong, and it's gone to 20,000 and is sort of hesitating there at this point. But no reason right now to believe that it's going to come down. It will probably maybe consolidate there as the way it's looking right now, and perhaps go even higher and go beyond 20,000 on the Dow Jones. On the S&P 500, more or less the same picture. Made a new life high of 2277, and from there has cooled off a bit. Could be potentially forming an evening star pattern, but I think right now it looks like more like sideways consolidation rather than a downtrend. The trend is clearly up. There's no doubt about that. You can see the clear higher tops, higher bottoms. Until that trend line breaks, no reason to believe that this is going to come down. As a matter of fact, it might just come down and then bounce back up again. So US markets, both the broad and narrow markets, doing quite well. Going over to Europe and looking at DAX, which had broken out a week or two back, that continues to make its strong up move after a multi-month sideways consolidation, and is well on its way, I think, now towards 11,800, maybe even 12,200 on the DAX. After consolidation of almost 6, 8, 7 months, I doubt whether that up move is going to get over in a short period of time, and further up move should be expected on the DAX. Looking at FTSE, so that has begun its climb again towards its life high, and the volume picture is a bit buggy, but the price picture is accurate, and this is on its way, I think, to making fresh life highs at 71.20, and in the coming weeks we should probably get a confirmation of that, or otherwise. Looking at CAC France, that's also very much doing exactly the same thing as the rest of the European indices are, and this is probably going towards 5,000, one of the biggest laggards in the main European indices, but probably going towards 5,000, and maybe even 5,200. Coming to Nikkei, so we have some bug in the data, but sure, it's also been quite bullish, as you can see, of late, and has gone from 18,300 in first week of December to 19,300, and I think consolidating there. So across the world, without exception, very bullish market, with further upside likely to happen in the coming week or so. Coming to India now, it's a very different picture. As we can see, the Nifty has been actually going down and has really not had no sign of any strength. If anything, the volumes are a little on the lower side in the last 2-3 weeks. Last week we had clearly commented about whether there was an upside that was possible, and you know, on the 9th, so this is where we were last week, and we are talking about the significant resistances higher up. And as you can see, that turned out to be quite true. The market actually capped down on Monday and was not really able to go up on Thursday, made a big gap down open, tried an intraday rally all the way from 81.35 to 82.30, almost 100-point up move, but not able to sustain. And you can see the long upper shadow, and today, Friday, is another red candle. The saving grace, if anything, is the low volume and also the fact that to some extent the MACD is not a negative crossover. However, it is in a negative territory, so there is limited bullishness on the Nifty right now. Given the concerns locally about economic growth for this quarter or the next, given the demonetization and the big drop in inflation and no interest rate cut, it's a pretty sticky situation. And while the global markets are clearly on the up, and we should probably have gone up along with them, the local conditions, the local issues are what the markets are more concerned about. And looks like 8100 will happen next week, and maybe even 8000 in the coming 1 or 2 weeks. So it'll be interesting to see, and then we'll very quickly getting into the last 2 weeks of this year, the usual little cooling off in activity, holidays across the world, and I would definitely say some reduced enthusiasm in the Indian markets. Maybe a wait and watch approach now till the next quarter results, or rather this quarter results come out from the second week of Jan, and then after that the market might really make a move. So we'll see how this goes. But right now, quite bearish, I would say, in spite of the bullish sentiment in the global markets. In the weekly chart, still some hope. We had this big, swings, and maybe there is a bottom that has been put in place at 7,900 on the Nifty. There is a possibility that it could turn around and go up, but the weekly MACD is weak. The indicator is not really showing any strength. So right now 79.50 or something looks like the stop loss for any long-term longs or multi-week positions. But overall, I think what can definitely be said for sure is there's no uptrend, right? The uptrend daily chart line has been broken. There's quite a bit of resistance at the top, and as those moving averages, long-term moving averages, turn down, there's going to be increased pressure on the on the top side. So downside perhaps limited till about 7,900, 7,950. Is there any immediate need to buy? I don't think so. It will just better be to wait and watch, or if you have to take a position, I would take a shot with the stop loss at around 82.43, first target 8,100, and then 8,000, maybe 79.50. Could it happen in the next 2 weeks? Of course. I mean, you can't rule that out. There's still a lot of drama happening on the demonetization thing. Another amnesty thing by the government has been revealed, so really don't know where this is going. And the Supreme Court is hearing some petitions, I think, in the coming week about the legality and the validity of the demonetization. So a lot of ifs and buts which are there in the Indian market, which should keep us pretty occupied for the next couple of weeks. So my bias is on the bearish side, and we just have to, or wait and watch, but no compulsion to go long. Coming to the Nifty Junior, if there's any hope on the Nifty Junior or the smaller cap companies, is the fact that it's still above the 200-day moving average, but I don't see why that is any comfort right now. I expect that the 200-day moving average on the Nifty Junior will break perhaps in the coming week, and then we'll see maybe levels of 20,800 or 20,600 in the time to come. Weekly chart is a little more bearish than the Nifty chart, so best to, I guess, wait and watch. Again, no hurry to go long. Again, if there is saving grace, it's that fact that the volumes have clearly come down, and the selling is not really happening on large volumes. Coming to our sector indices, the Bank Nifty weekly chart, you can clearly see the Bank Nifty is still in a downtrend. It has taken some support on a long-term weekly moving average around 18,200, but the downtrend is very, very much intact, and I don't really think it's got any. There's really not much evidence at all. If anything, its inability to go back to that downtrend line this week is perhaps an indication of further weakness that could happen in the banking stock side. So there was some bullishness till maybe last week. We're talking about this 200-day moving average holding, and perhaps could go up. On the other hand, you have this 18,700 resistance level, and it's basically been doing a dance this week around the 200-day moving average at 18,328, and it's a question of whether it breaks down or not from here on. Right now, it looks like the evidence is more building on a downside move to maybe 18,000. Sorry, 17,900. If that breaks, then 17,500 I think becomes a distinct possibility. So this is like turning out to be more and more a downtrend flag on the daily chart. And if it is so, then almost a 2,000 or 1,500 point drop from current prices cannot be ruled out, which takes it to around 17,000, which is sort of support zone where it has taken support several times in 2015. Looking at the PSU bank index separately, and we had mentioned that there was maybe some hope there. Maybe it has really not broken down yet, but again, not showing any significant signs of strength. Consolidation at best going on, and volumes a little, iffy. The indicators are also sort of sidelined, going sideways very much. Really nothing much to say, except that the PSU banks, I think, should be a wait and watch. No position should actually be taken. No strong position should be taken. They could go up, they could go down. The private sector banks clearly seem to be on the bearish trend. The PSU banks sideways as for now, consolidating, and wait and watch till a breakout or the breakdown happens. Coming to the other sectors, energy, really CNH energy, that is, really not doing anything much. It's not gone down a lot, but clearly some resistance on the top side. This could turn out to be more like a consolidation, and the energy stocks could break out. This is one sector which definitely should not be shorted. If anything, watch for taking positions at lower levels. You can clearly see some selling happening at the 10,000, 10,200 range, and maybe it comes down to maybe 10,000 or 9,900, at which point you can have a review. But really nothing compelling to say that one should buy into it and go long in it. But definitely don't go short. FMCG was one sector last week when we said was probably bearish, And well, it has proven to be true in the last 2 days, today and yesterday. You can clearly see that finally it has broken down. Wednesday, there was just a sideways movement, but the breakdown happened yesterday, and then today it is continuing. If it goes to at around 19,800 and breaks that, then I think it opens itself up for much lower possibilities, maybe 19,500, and who knows, maybe even 19,000 at that time. A good support, potentially a good support. So FMCG continue to short. Stop loss as far as the FMCG index is concerned, about 20,300, 20,310. But otherwise, I think the bearish view has been revalidated and reaffirmed by the market action this week. CNX Infra, so that's also basically gone down and has taken a lot of resistance today or this week at the long-term moving averages and has turned down and is possibly going down to maybe 2600, 2700. So this is another place to be bearish. And today, in a sense, I think the bearish sentiment picking up a little bit of strength, and yep, this is also something heading further down. CNX IT, so that's perhaps the one major sector which has clearly gone up. And last week we had mentioned that this was looking like a flag, a dip, and then should perhaps bought into. And this week it has really followed through, and the CNX IT index has gone from around 10,000 levels to 10,200 levels. So on a sector basis, about 2.5% clear positive return, and the MACD getting into positive territory right now. It should be, we should probably be looking at it as going up further. Maybe 10,500 is the place to watch out for. The depreciating rupee, not sure how much of a factor that is anymore, but the depreciating rupee is just adding to the benefit of this very strongly export-oriented industry, and any dip in the IT side should be used to go long at. So our first index for this week, where we are talking about being long, and last week also we were long on the IT space. Coming to pharma, so pharma, healthcare, all that has come to a support, as you can see today, and done a bounce. Is this a hammer that will revert? Somehow I don't think this is going to hold. I would think that 10,550 or so will break down on the pharma index, and once it does that, please note that that's almost a 2-year support level. This one is just a little different for future reference, and if that breaks, then 10,000 is easily possible. It's almost a 5.5% drop on the index in the coming weeks. This is the big weekly picture of pharma, and the weakness is definitely not out of the system. Perhaps we'll go back to test the 10,000 levels, and then we would review this big, almost 2.5 year support line, which has been broken after forming a sort of very vague distribution pattern. I think it has some more way to go before buying can be, any aggressive buying can happen in pharma, right? So the daily hammer needs to be watched carefully, but a break below 10,550 should be used for shorting the pharma stocks. The realty space, this is where we were long last week and said this is one place where you could perhaps buy apart from IT. And as you can see, this is the daily chart. It's managed to hold this trend line, which is an extension of the neckline of the very sort of quickly and sharply formed head and shoulder bottom, left shoulder head, right shoulder breakout test, and then now taking its time, not going up. I would say consolidation. Overall, there's still some weakness in the uh, daily chart. A lot of the resistances on the top side, so we have to wait and watch. This is the weekly chart, and after doing this hammer, inverted hammer confirmation, another week of a sort of spinning top doji type. And once this breaks, then 1,500 should probably be a possibility uh, on the reality space. So no need to hurry into this space, but some sort of accumulation, especially if the markets fall and this goes down with that, some accumulation should be done, in my opinion, as far as reality stocks are concerned, and also on the IT space. Coming to other stuff which we haven't yet looked at, auto index. So that's sitting at a very, very important old lifetime resistance or support at one point. And whether it will break that or not, that is really the big moot question. Tough to answer. We just have to wait and watch. On the weekly chart, you can see how it came down, has bounced up, and perhaps likely to go back to 23,000. Two new launches. One is the Hexa. So sometime I think 18th of Jan. And test drives are now available. The other one today's announcement is Maruti Ignis, a small compact sedan type thing with a very, I would say, odd design look. May appeal to the youngsters that it's targeted for. So could be some growth there, but then the demonetization thing and all this, I think people are realizing is actually begin to bite, and there's a lot more pain before it's all forgotten and the confidence is back. The government trying to convince people to buy. People are holding on to their cash, not sure. Rumors about the 2,000 rupee note becoming invalid in a few months or a year or two. All sorts of stuff. So I think confidence has clearly been shaken, and we will see the impact of that in the coming weeks and maybe even months on the Indian economy. Auto, no exception to that. So some hefty discounts already announced by M&M on their range of vehicles, and I would not be surprised if other car manufacturers are quietly doing that. They've extended their annual shutdown periods for maintenance because inventory has been building up. So we'll have to see how this pans out. So as far as autos are concerned, they are like, the auto index is basically deciding what to do with their to go up from the 200-day moving average or to break down from the 200-day moving average, and that 50 and 100-day moving average, whether to break out, not break out, etc. We'll have to see how that goes. And going down to maybe 19,400 is not ruled out. So while that is for part 2 and not part 1, I'm just speculating whether the four-wheeler pack and the two-wheeler pack are behaving differently. The two-wheeler pack would have been hit more by the demonetization than the four-wheeler pack. So we'll have to sit and see how that pans out. So some stocks could be good for going long, and some stocks could be good for going short on the auto space. We'll have a look at that later when we look at part 2. Okay, then looking at capital goods. So capital goods also now trending down. The long-term moving averages are more and more sharply going down. On a weekly side, could say consolidation, but looks like there's a bearish bias even on the weekly chart. Really no compelling reason to buy. So just to wait and watch and see where this goes. So this is another bearish sector. So everything bearish so far except IT and potentially reality. Looking at metals, so metals made a double top. They're quite bullish on it for last many months, but this was the big issue which we had mentioned last week, whether it would be able to break out of that or not. This is where we went on the, this was what, 2, 3, 4, 5, right? So this is where it had gone last time when we did the IMR, and the question was whether it would break that resistance or not. And clearly, I think by Monday we had the evidence that it would not break the evidence. By Tuesday it was confirmed, and then it just been going down. And today's big red candle, I think, just confirms this downward bias now on the metals side. So clear double top has been put in place. Metals are definitely heading down, but in the long term, looking at the long-term moving averages, they're still very bullish and still strongly trending up. Could go down to maybe only 10,000 or 9,900, and from there turn around. So for short-term bearish traders, I think metal does definitely give us an opportunity. There's been a big, massive run-up since March, April this year, without any meaningful correction in a multi-week, multi-month basis. If there's some correction here in May, all right, and then after that really nothing, going up. Would argue that there was some consolidation in sideways correction, but looking at this weekly chart now, you can clearly see that any up move last week has been completely negated by the down move this week, and I think further down move is possible, after which it probably be a good time to buy. So may not be aggressively short on metal. There are better sectors to be aggressively short, but this could let it cool off about 10,000 is where the alert should be, and then take a view after that. Reality, we already talked about it. Consolidating, going sideways, may go up, so we'll have to wait and watch. So that brings us to the end of part 1 IMR. Perhaps we'll do the part 2 on Sunday. I'll be updated, confirm on that. So the closing for this part 1 is two things, or rather a few things. Number one, global markets clearly strongly bullish, and further upside can be expected across all the global equity markets. India has been gripped by its own set of local factors right now, and things are definitely bearish. They're definitely not bullish. If anything, as a trader, one should be shorting. That would be the safer, higher probability, success rate probability thing to do. And if there are only two sectors where one can perhaps look at long, is the CNX IT, that's for sure, and probably the reality space. So hopefully all of you saw the detailed reality review we did last week for almost 20 reality stocks, so that basically continues to hold that view. So you can review that to find specific opportunities in the reality space. Apart from that, all other sectors, FMCG, capital goods, Nifty Junior, healthcare, metals, all that are quite bearish, or bearish to very bearish. If there's anything else which has showing some strength, it is to some extent the energy or the power index. So that is again a wait and watch. Right? So that's it for part 1, and hopefully we'll find some time this weekend to do part 2, and I will announce that through the Yahoo groups. Right? So thank you. Have a great weekend. More or less a continuation of last week's view. Nothing particularly new this week. And I think, like I said, next few weeks after the holidays and all of that, things settle down, and maybe in the new year is when we'll see fresh action on the markets. But in the meantime, remember that a lot of event risk in India. Demonetization court cases are coming up, I think, next week. new announcements being made by the government on that front. So that's a risk we can't avoid. So limited upside, mostly downside. As a trader, short, and there are specific sectors to look at potential longs at lower levels. So great, thank you for watching, and hopefully the recording should be up either late tonight or tomorrow. We'll send across the links for that. And please get in touch. These are the contact information for BIC, and like to hear your inputs, your views, and any suggestions that you may have. All right, have a good weekend. Bye.